Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 19th, 2018. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the ES as we head into the holiday shortened week here in the United States. For the most part, we will likely see quiet type of behavior, but it could be kind of one of those markets that by the end of the week becomes never short a dull market because it could drift higher. That's typically what happens. So if we do start down early in the morning, any early rejections or bounces off 2700 or 2705s or anything higher, could be an opportunity where this thing just kind of quietly drifts higher the rest of the week. Now overall, we still continue to remain within this larger range here, and that continues to develop. I don't think we're done developing that range. Anytime you see a move of this magnitude, you tend to develop a range for a while, digest that move, build out, and again, that type of move fuels, or that type of behavior will fuel the next potential move, likely to the upside. But again, this thing can go in either direction pretty quickly. So any failure at 2700 would be big. The recent pivot low would be big, right? But overall, I think more back and forth type of behavior is likely, with a quiet uptrending type of move by the end of the week. Let's take a look now at the NQ. If you take a look at the NQ here, you'll see this one is starting off with a bit of a failed high here. Had a bit of a rally in overnight trading, and then a rejection off of the 3-day highs, and then now back down. And again, that can tend to be quite bearish. A failed new high in a downtrending market can tend to be very bearish. This could get some folks short, but again, any rejections here could turn this thing back around. And now we're squeezing back up above this blue dotted line right there, which is basically the previous month's close. That 69.60, 69.50 zone. Above that area will squeeze back towards 71.68. So remember, what we talked about last week was these lows looked strong enough, serviceable enough for a likely return trip back to the FOMC key level over the next 1 to 5 days, maybe as many as 1 to 8, 1 to 10 days, right? So overall, we'll see how this plays out. A failed new high in a downtrending market is something to be aware of, and bears will actually be looking to try and get short here. If they don't get paid, that's when a squeeze may occur. Okay, let's take a look now at crude oil. Obviously, crude oil has been very, very bearish. As bearish as I've ever seen it in a long, long while. Recently here, another attempt to get above 2-day highs. We talked about that Friday during the pre-market video and mentioned that if there's a failed new high, it could lead to a big selling opportunity. Right now, we are retesting the sell zone at the moment for swing bears. And again, as I would always caution, once you get this far down into a trending move, it becomes more and more risky to sell down here because we're closer to the end than we were to the beginning. So at some point, this is not going to work anymore. There will be a failure. But until that happens, again, the current trends suggest more weakness. We have bounced off 55s, but nothing says it has to hold. So right now, bears are trying to keep this zone right here, 57.5 offered. After this rejection, 2-day highs, here's a retest for a shot at seeing much, much more weakness to the downside. Even if we get a retest of 55s, that'd be a move of about $1.75 from where we currently are. So right now, it's setting up like it wants to get another move lower here, and until price can break above a prior pivot high, this thing continues to see more weakness, and that's going to continue to be the case. All right, let's take a look here at let's do gold. Right now, gold is compressing big time. Again, it has remained bullish, and it has done just enough to remain bullish, and it's done just enough to remain bullish ever since this day here. And you can see the rounded behavior here. Here's the 1240, 1245 zone, a big rounded bottom that could eventually lead to a massive breakout type of move. I think for the most part, this one could continue to develop into even the end of the year. We may not see a breakout from this till the beginning of the year, or maybe sometime in December. Who knows if it were to be the case. But so far, it is holding. It's doing everything it needs to do, but it's just continuing to develop. So no breakout here, but it is finding a decent low off the 1200s, and we could see further development down the road. A major breakout may be seen. Lastly, let's take a look at Bitcoin, down nearly 6% here this morning. Fresh lows. I believe it hit below 5,100 this morning, reaching a low of 5,060. And that's, again, a pretty significant push, down $1,000 or 1,000 points from the 6K level. But remember, 4,400 is the level we've been talking about for many, many months, that if this descending wedge breaks to the downside, watch 4,400. It's coming up here pretty soon. That could be a spot where we see some sort of reactionary bounce. So again, this thing is still headed lower. There's no reason to jump in front of it right now unless you just want to. Whenever this thing starts to show rejection, you'll see it. And again, 4,400 or thereabouts might be the zone where that could become a very good play back toward value. All right, that is it for now. Let's see how this plays out heading into the new week of trading. One quick announcement: I will post another pre-market report Tuesday morning, but from there on I'll go dark until next week. And I want to wish everyone else a happy Thanksgiving holiday here in the United States this week, and we will see how this plays out heading into Monday's trading action. Take care, trade well, and I'll see you in the trading room.